Hey there, Christian from Hertz Tribeca Trade Group with your end of day recap for Wednesday. And I've got the S&P chart in front of us and just a couple of observations. Actually, one of the subscribers just posted this weekly chart. Subscribers of Tribeca Trade Group just posted this chart of the S&P on the weekly, and notice where we've kind of hit here. This is my own chart of with my own trend lines on it, but you know, what we basically a couple observations here is we were in really, I think, well need of that 1% down day. I think it just kind of took a little bit of the overbought levels out. On the daily chart we were not overbought, but you look at the RSI. The RSI on S&P right now is a 64. So we were for a couple weeks, a good couple weeks, overbought on the weekly chart. We're not anymore. Maybe one negative thing here is we've got an MACD crossover that may be happening soon. And it's been a bullish crossover now for a while. So maybe that's something to watch. But you go back to the daily chart, and all in all, not a bad day. We started the day, you kind of didn't know how today was going to go. Asian markets were down, which was expected last night. European markets, you take a look at what those were doing today, and really not bad at all. This is the Euro stocks, really unfazed, and we're kind of jumping up and down because we have a little bit of volatility. And oh my God, the market's down 1%. The market was down 1% yesterday. Take a look what's going on in Europe. Down 40 basis points the last 2 days. So really unfazed. I would say. And, I think it was a good sign. We saw emerging markets actually come back today. That's been the leader. You kind of go to my overall screen of the markets, and you could see that, really what's been the leader this year is emerging markets. Look at the Hang Seng's up 10% this year. You could see some of the other areas also up like around 4 or 5%. You get into some of those other regions. Take a look. So I know everybody's talking about, and the media is so focused on this healthcare vote, and everybody's thinking, "Oh my God, the Trump rally is going to end if they don't get this vote." Explain. Someone please explain to me why these areas are up so much. Are these so? If you think this vote is going to matter, does that mean that the Hang Seng is this big rally that we've seen year to date in the Hang Seng in China, in the Kospi, in Taiwan, in India? Are they all worried that the vote's not going to go through and the market's going to fall? I don't. I honestly, I just don't get it. I think people in the media are looking for a story. Sure, we could get a little bit of a blip of volatility if this doesn't go through fast and Trump's agenda doesn't go faster than everybody's expected. But I just think you have to take a step back and look at the global markets and look at what they're doing. It's not, I know we're in the US and it's always all about us, but the rally that's been going on is global. So, yeah, I think there's positives on the agenda. Maybe if it gets slowed down, sure, we may see a little bit more volatility. That kind of makes sense. Are we going to see the market crash? I don't believe it. I really don't think that that's going to happen. Maybe I'm going to be wrong, but when you look at how much these areas are up, it just tells me the reason why I'm showing this and how much these markets are up is because this was an area that everybody got worried about because Trump got president. So if these areas didn't go down with Trump talking about a negative trade plan and so forth, then I just don't think, I think we're too focused on politics and not focused on the price action. And I think all you have to do is kind of watch the price action in other areas of the world that says that there's something else going on here besides Trump's agenda. So that's my soapbox for today. Let's talk a little bit about the market action today. S&P was fine. S&P ended up just about 25 basis points. I'll talk about some of the weaker areas of the market first. We'll start with small caps. That when we talk about the down 1% day, that was S&P. Small caps were down 2.7% yesterday. So there was no 1% day for small caps. They got smoked yesterday. So they actually started the day lower, and it looks like they were going to take out the lows. You could see they're kind of holding this trend line. It's I wouldn't necessarily call this a hammer bar. We're just going to have to moderate this as on a monitor this on a day-to-day basis. But I don't like how they're underperforming. So we'll have to just see what small caps do tomorrow. You could see that it kind of was looked like it was going to be a bad sign this morning when they took out the lows from the pre-market session. However, it looks like some buyers came right back in and pumped this market back up. So that's the week portion. A couple other weak areas. Oil. This was the big red bar was the inventory number, which it did show that inventories grew. I can bring that up right here, and we did get a build of 4 million barrels versus a survey that was supposed to be 1.7, so a much higher build in terms of crude oil inventory. So there's a lot of oil sloshing around, and the good thing here is that we didn't break. It looks like we touched $47. I'm not sure if there was an area of support that we kicked off of. I didn't see it earlier, but sometimes there's always a version point of control that's out there. We did hit that one a couple weeks ago, but still it looks pretty weak to me. Even though we bounced from the lows, we're still underneath that yellow line, that yellow 5-period exponential moving average. So as long as the price remains below here, it's weak, weak, weak. Again, this is the second or third candle that we've seen a hammer candle in the last 2 weeks, but we really need to do more than just come back to flat. I would like to see this get over the hump and start to get above this yellow line. So nothing real constructive other than we didn't tumble today. And then the banks did finish lower on the day, but you could see from this candle, you could see this version point of control, which is pretty close to being taken out. Sometimes these act as magnets once we get outside of value. Sometimes the price is looking to see where buyers and sellers met up before, which is this yellow line. A lot of volume happened at one point in time back here. So a lot of times price will look for these areas once we get out of range or out of value. So the regional banks, again, they looked pretty dicey this morning. First 5-minute bar, they were down about 2%, but just finished down 28 basis points. So not a huge win, but the fact that we didn't crater, again, coming in today, we didn't know if we were going to get another, down 1% day. So the fact that the weak areas kind of held, or in my recap of the day, I put they bent, but they bent, but they did not break for the day. And then a couple of things that I talked about pre-market. I said also besides those areas, watch the strength where we've had some really nice strength in the market. And sure enough, that's in semis, which is one of the areas that I pointed out and said if these things manage to recover, I think it's a really good sign. And you can look at this chart of the semiconductor ETF SMH. Really no technical damage done here whatsoever. No crossing over of any of the moving averages that are on my charts. You'd had a big red bar, obviously, but the price is still above the blue line, the 20-period exponential moving average. So the strong remains strong. That's a little bit stronger, but if you look at the Qs finished up about 70 basis points today. A little bit of a dip into value, but it looks like we're coming out right above it. And also no moving average crossover as well. So I think going into tomorrow, and same thing. I'm not really going over any individual names, but Apple had a nice day as well. Nice little recovery. The price action remains above the yellow line, so the bull trend remains there. Facebook also climbed back today. Google, which was weaker yesterday, not so great. Basically flat today. No big bounce there. Did have a bounce, but kind of got rejected. Amazon, a little bit of a bounce. One thing I'll be watching tomorrow is Baba. Baba did come back and reclaim this trend line. In terms of unusual option activity, we hit a real nice winner today. I'm holding a small piece of this, but this is FMC. This is a material name. Real big size call play went up for the month of April. I was going to look to go out a little bit further. I couldn't find anything that was really liquid in terms of options. So sometimes you have to stick to where the liquidity is. But FMC, what a monster play today. I got in this trade I think for about $1.60, and was taking profit targets up at around like 240 today. So really nice. It closed on the highs as well, which is a good sign. But it was basically right around the lows of the day. Right around sub $60 when the calls traded, and the stock finished on the highs. So really, really nice winner for the room today. I think a lot of traders took this trade today in the Tribeca trading room today. So really nice play. Other than that, a couple other plays. I did not get involved in Snap. We saw aggressive call buying a couple times in Snap. I have yet to really trade this name. It was up 7% today, and at one point, in the beginning of the day, was probably one of the most exciting things that people were looking at. First hour or two of the day was really quiet in terms of option activity. Buyers like that FMC happened about an hour and a half, I think, after the open, somewhere around there. But for the first 45 minutes of the day, I kind of just sat on my hands and just said, "Where's this market want to go to?" And just waited for a little bit of confirmation. But Snap was a real nice play. They went in, several times. I remember calling out Snap aggressive call options a couple times in the trading room today. I just wasn't feeling it. And again, I've yet to trade the stock yet. I've just kind of been watching. We also saw a little bit of Twitter, so kind of the junk. Sorry, Snap, but a couple aggressive call buyers. That was the first couple of things. Coach also for the second day in a row, we saw call buying in that name. ETN. This was repetitive today. The first one was about, and I always like to look at the time series of trades, because this was a repetitive call buyer. So the first order that went up was for $1.20, and then they bought more for $1.30. That's always constructive to me when they come in it for the second time and put on another chunk and put it on at a more expensive price. So those are the May 75 calls. The name really didn't do too much today. I took a really small position in it. That one I'm holding on to. Again, it's a small position, and it's May, not April, so I'm a little bit more comfortable holding on to that. There's a lot of BAC that traded today. BAC, you could basically come up with your own story every day on BAC flow. There's puts that are bought every day, and there's calls that are aggressively bought. So whatever story you want to spin on PAC, you're able to do it on a day-to-day basis. There was the main call buyer that I saw was the April 25s, but there was also a lot of aggressive puts that were bought as well in BAC. But you could see there definitely was more calls that traded today versus puts. There was some Citigroup calls as well. So some dip buying in the financials. KKR saw some call buying. There was a block of WWE, which we don't normally see a lot of activity in that name. I took that trade today and just dumped it on the close for a scratch in WWE. A couple all other small call buyers. Micron is just like a daily call buyer that's been coming in. I'm still long the calls. I have to figure out what I want to do once we get to around the close tomorrow, because they do report after the close tomorrow. Maybe I'll take off a little bit and hold a small piece going into earnings. I don't really like to hold a lot of names into earnings, but man, we've been seeing just a lot of call buying and large buying in Micron. C-Trip, a little bit of a call buyer there. Same thing with Salesforce. And then on the put, there's actually some decent sized put trades as well today. ARRS saw a big put buyer. Also Mattel and in Myland. We saw these a couple times today. There was also some Mays that also traded in Myland. And then last, it was pretty quiet on the ETF side in terms of just really notable trades that I saw. But FXY, there was a lot of FXY puts, and if you look at, we'll look at straight yen futures. They did end up selling off here a little bit, but so somebody is not confident in this breaking out. Let's just look at the weekly chart. It did get into value on the weekly chart. and is also, it's this big white line is the 200-day moving average. So, this is a little bit of a counter trend rally, I would call it. It is above this this sideways pattern. So I think you want to respect price. If you want to try a long as a counter trend rally, watch that 200-day moving average. I'm not in this at all. I don't really like to take long trades below the 200-day moving average, but you got quite a distance there. But the fact that somebody seems to be buying a lot of puts in the FXY, thinking that the yen goes back down, makes me just kind of want to sit on the sidelines. I see a bullish developing pattern here. Maybe it rises up to the 200-day, but if somebody's buying puts, I don't really want to be involved in it. The other thing I'll mention, which I don't make mention of every day, but man, there was a lot of cash, big block trades that went up today and a lot of international ETFs. And I've been talking about the strength, as I did in the beginning of the call, the international markets and how they've been strong. But there's just more buying going on here. Let's see if I could find a couple of the blocks that went up earlier today. There was a nice one for VEA, 1.7 million shares. There was also one for IEMG. I went through; these were all swept, so these were buys. 760,000 of IEMG, big trade of VEA, also IEFA. This is all that's international developed markets, so a lot of Europe and Japan being bought in a lot of emerging markets. There was also a nice buy of EWZ for about 500,000 shares. So again, it seems like there's people are gravitating a little bit towards the international, both developed, both Europe and both emerging markets. So I'll leave it there for tonight, and I'll see you guys back in the morning in the Tribeca Trade Room. Thanks for watching tonight's video. Have a great day.